Morning, Cam. Welcome back to Trading Success with Cam Buchanan on a Monday morning. How are you?
Good, Chris. How you going?
Very well, thank you.
All right, so let's get into it because last week was a very interesting week in the markets. We had the markets, obviously the week before, had quite a strong sell-off after that news of the war, airstrikes. Last week, however, the market seemed to rebalance. There wasn't any more continuation of that war situation, hadn't got any worse in the Middle East. And then also we were buoyed by a lot of results as well in the markets. So we're in the middle of earnings seasons in the US. So the major stock indexes that we trade, being the S&P 500 and the Nasdaq, a lot of the companies are reporting their results at the moment. So last week we had Google, Microsoft, and Meta all share their results from quarter one, and it was very, very profitable for a lot of those companies. So Microsoft showed a 20% rise in profits. Interesting though, their share price didn't react at all. Maybe all that good news is built into the price, and that's what seems to happen. Like gold, for instance, is just sort of just in a range now. So I think all of that news, all that there's a lot of insiders know what's going on. So a lot of people were expecting a war to come out, or at the start of a war, probably started to load up on gold early. And then there's just really no more follow through now. So we're just waiting, obviously, for the next thing to come out, I guess. So gold is sort of stabilizing around that 2,300 mark. Probably will get to 3,000 later on in the next couple of years, because we're coming into the peak of this commodity cycle. So it probably should still run up, but at the moment for trading, it's sort of in a range at the moment. So that's kind of where we're at there. But so this week, in terms of earnings, we've got Amazon coming out Tuesday, PayPal, and AMD. AMD are a big graphics chip maker. They kind of compete with Intel and NVIDIA, kind of in that space. So, and they've appreciated massively in the last 5 years. So Wednesday we've got the big pharmaceutical giant Pfizer, and then on Thursday we've got Apple, Block, formerly Square. Some of you guys are probably aware of when you go and pay at the counter these days. A lot of smaller merchants are using squares, or those little square touchpads. So they're coming out, and then also another giant of the pharmaceutical world, Moderna, are coming out as well. So that's pretty much it. Also, we've got a lot of news, red flag news this week, and also we've got the Davos World Economic Forums on at the moment as well, I believe. And so this Wednesday morning, we've got CB Consumer Confidence. So that's coming out at 12 a.m. So if you're trading the US Open on Tuesday night, that could affect. So it's very early Wednesday morning, right on midnight. That announcement comes out. Then there's manufacturing PMI on Wednesday night, and non-farm employment on Wednesday night also. There's a bank holiday in Germany on Wednesday as well. So if you're trading the DAX, which not many people really trade, but if that probably will be shut, I'd say. So there may be a little bit more activity coming over onto the indexes on that day. And then on Thursday morning, we've got FOMC. And I think there's one other announcement on Thursday night as well. So yeah, there's a fair amount of news that should have a short-term effect on the market. But I was listening to an article this morning about what's happening in terms of big players in the market, and it seems from what this person was saying, and they were saying that doesn't seem to be a lot of big players in the markets at the moment. Still a lot of money on the sidelines. So a lot of the day trading in the futures market seem to be really a lot of shorter term private investors. So we're not. So what that means is that prices are quite will rebalance. There'll be a lot of up and down sort of volatility, a lot of short covering We saw that last week. Somebody asked me at an event recently, what is short covering? Well, short covering is, I'll get into the charts and show you, but basically it's where people that have been short, or traders have been short for maybe 1 or 2 days, expecting the market to go a lot further down. The market doesn't go down, and the market actually goes up. And when that market starts going back up, those people that are short have to buy to exit their position, either to take a profit or to just get out of the market. They realize the market's not going their way. And that actually brings in a lot of shorter term momentum traders as well, buying the market as well. So there tends to be an oversupply of buy orders and sellers not prepared to come into the market. And when you get that oversupply of buyers and not enough sellers, then prices go up, right? So that may rebalance again this week. So the markets may come back down into that range. But let's look at the charts, and the charts will really show us what's going on. So let me start presenting my slides. So I'll start with our big indexes.
Yeah, because you noticed on a few charts when I had a look at a couple, there was that sort of slight V shape over the past sort of week or two, as you were talking about the bit of a sell-off and then a quick bounce back.
Yeah, that seems to be what's happening at the moment. Just a lot of that activity. So I'll bring this over. So let's look at our favorite market, the Nasdaq, which is so that was the big sell-off we had 2 weeks ago. That was last week. So this weekly chart is basically what we call imbalance. So we had a fairly low volatility week last week. However, compared to the week before, but compared to what we've seen over the last 2 weeks, big volatility. So there's been a very big movement in the markets, and this is what we love as day traders. So you can see where if you compare to where we are from this week's price, last week we actually failed up at the 61.8, all right, which is up around about 17,900. So if we look at the daily chart, so you can see the key levels this week will be this last week's high. All right, so this is the day today. We've just opened up. I'll just bring this. We've just opened up inside, obviously, the range of last week. So we've slightly gapped up already on Monday morning. Now, on the daily chart, you can see this outside candle here is representing the balance. Now, are we going to go into imbalance and really break out to the high side? All right, and if we do break out to the high side, we will create this little imbalance zone. So if this is the lowest price of the day, that will be the imbalance that we've created on this chart. All right, so potentially prices will move higher. If we come back in, then I'd be looking for this high from Thursday's high as a key level. If the market comes back into that price, which is let me just change that price is 17,826.50. So it'd be interesting. That's going to be a very key pivot point. If the market comes back into that range, then we may come back down and trade within that daily range. So the market will just go back into balance. Yeah. If we continue higher, then we could be breaking out higher and extending into these expansion zones from last Thursday's reference point there. So you can see on the weekly chart, we've got the 76 above here, up around 18,000 mark. So those two levels are really important on the Nasdaq. The weekly high and Thursday's high in the short term today. If we're trading Monday, they're going to be key reference points, and market will potentially come back to those and test those throughout the week as well. So we'll see. Obviously, news is going to have an effect on the market movement this week, particularly with a lot of short-term traders in the market. They tend to react a lot to the news. So that's that. S&P is very similar in its nature. Where is the S&P? Here we go. S&P is doing very, very similar things. So Thursday, that's that Thursday bar. This is the daily chart. So Friday rallied higher. So this is what I mean by a short covering rally. So the week prior we had quite strong selling, and then we recovered. So Monday, Tuesday, Wednesday, Thursday, Friday rallied against these shorts here. So it was a rebalancing in the market. We've also got this imbalance zone on the larger chart, on the daily chart down here, which has not been filled. So that if the market sells off, then that's another target as well down there. But very, very similar to Nasdaq. It's got that Thursday high and the weekly high as well, being that price there, which is 5145.75.
Yep.
And now let's have a look at Bitcoin's gone really quiet lately. There was so much hype around Bitcoin, and Bitcoin is just basically in a range. It is this is the 4-hour chart. So on the 4-hour chart, it's in a slight downtrend. And you can see also the most traded price here. If we look at the profile from this big swing right down here, which was down around 41,000, the big swing up, you can see where the most traded price is up around about 70,000. Now that was around about 68,000. So that most traded price has risen up. So there's a lot of people that have bought these highs. So a lot of short-term traders trading on leverage. Basically, it's just I think a lot of just a lot of traders at the moment. Just people getting trapped on the highs, buying high, trading with leverage, getting trapped. All right, so there seems to be a lot of traders buying around these lows and just trading this market at the moment, because the market's got a very clear range. So you've got around about 60,000 where the price double bottomed. And then we've got where the market failed to break that 72,000 mark, 73,000. That's been an area of resistance to the upside. So this market's quite range bound. If we look at the daily version, very much in a range, starting to actually swing down. So we are in a swing down. So it's looking a little bit bearish, and it could still be, because typically I've been looking at halving cycles and what happens around the halving, the market tends to rally after the halving. And that rally could take, months and months. So, we could be just still starting the cycle with Bitcoin, but at the moment it has gone very, very quiet. And the last one I want to look at is gold, and silver's doing a very similar thing, but you can see how gold in the last 2 weeks has really cooled off. So we're still in an uptrend on the daily chart. However, we are actually swinging down. If we're looking at the swings, the market is trying to swing down. So it's once again it is trying to go down. So you can see here, if you run a channel over the range, we run a channel. Once again, it's giving you a fairly clearly defined range. So market's kind of stuck on the 50% of that channel at the moment. So that's acting as a little bit of resistance to the upside. But it's definitely in a time phase at the moment where the market has had a very strong rally, and now it's just time's catching up with that big price move. But longer term, it's looking like it still wants to go up, but once again, it's just trading within a fairly tight range right now. And silver is very similar as well. Silver had that big rally up to 30,000, and then we've kind of failed at 30,000 resistance, and now we're stepping down or swinging down, but we're still remaining in an uptrend there as well on the daily chart. Oil, I haven't been paying too much attention to the oil market recently. It is, I'll just quickly have a look and see what oil is doing. Make sure we've got the right contract. We're on the June contract with oil. So here's oil on a daily perspective. Just get rid of that. If we look at, you can see here, we've got some liquidity zones under here. So it looks like there's some very strong buying levels around about $82. And looks like there's resistance up at that liquidity zone of around 87. So we've double topped there. Once again, we're on the daily chart. We're still in an uptrend. We are swinging up as well. It looks like we've done a complex retracement here. So once again, it's in this period very similar to gold, where we've had a very strong rally and then the market's gone sideways. So we're in this range period at the moment. So maybe FOMC news might spur something on in these markets this week, but I think it will be fairly balanced trading. Just really, I think a lot of two-way trading at the moment. I don't think you can fall in love with any one particular bias at the moment. There's still a lot of uncertainty on the geopolitical macro level, but I think there's just going to be a lot of up and down type trading. So, which is good, because when you get that, you've got those clear resistance levels you can short off, and then you've got those clear buying levels that you can, or those support levels you can look to buy off. So that when you get those really defined ranges, I find it a lot easier to get those really nice moves. So a lot of kind of reversal type trades at the moment seem to be working really well off those major lows and major highs, or those liquidity areas in the market tend to be acting as a lot of support and resistance. And that's what a lot of traders are saying as well. They're really loving the liquidity areas and really timing their moves off those liquidity zones. So good areas to look out for, particularly in this two-sided type trading. So that I'm going to stop my share. So that seems to be a wrap with the charts, guys. So fair bit of news to come out this week. So lots of big companies promoting results. We can see how big those moves are when those companies do come out and print their results. Like Microsoft on Thursday had a huge rally in the morning, and that was after hours as well. That was just when we'd stopped our trading room. The market just went ballistic to the high side on Thursday. And then so we've had some very strong rallies in the US session. Last week, the market did a lot of grinding downwards, but then rallied just incredibly strongly in those US sessions. So there's been some very big moves. Trying to find the 30-minute chart here we go. 30-minute chart gives some really good perspective here. So you can see here, this was the open of the US market on Thursday. Huge big rally. And
the screen again, Cam? Yeah, because you turned it on.
Got to start sharing. Share screen. Entire screen.
That's it.
Yeah, so basically, guys, this is a snapshot of last week, So that was Monday, Tuesday, Wednesday, Thursday, Friday. So you can see how the market, trade off those liquidity zones.
Yeah.
On the 30-minute chart, we came back to that liquidity zone, went long off that in the US Open. And then once again, we created a liquidity zone down here. So that's going to be a key reference point too. If we break that Thursday's high, so where we're currently trading at the moment is we're in that range. Like I said, we got last week's high, and then we got Thursday high there. So we're just trading in that range right now. If we break under that Thursday high and hold, we've got this liquidity zone down here. So you can see the US market's been rallying quite strongly in its session.
Yeah, it's good.
Beautifully,
it gives you a really good visual.
Time framing. Sorry?
It gives you a really good visual when you look at it that way as to where these areas of, as you say, reversals or support and resistance are sitting.
Yeah. Yep. Yeah, they're really key pivot points here in the market, and that's why you don't need to overdo trading. You've just got to be very precise and have an order and a structure. We talk about in our training programs, we talk about having an order of, what are your key support and resistance areas? What techniques in terms of chart analysis are your baseline techniques that you use? And that gives you great order when you're looking to put a trade on, because if that is your baseline techniques aren't in those areas, then you're not looking for trades.
Yeah.
You're just waiting for the market to get to those areas. So that's really what you got to work on is what are those baseline analysis techniques that you use that work. There's an enormous number of things you can use. There's Fibonacci levels. There's the liquidity zones. There's certain price patterns, the double tops, double bottoms, those things. There's all the brick wall levels. So there's a lot of levels you can use, and it just comes down to the ones that that have a higher probability of working from your testing strategy. Yeah. So anyway, guys, have a good week in the markets. There's going to be lots of
volatility,
opportunity.
Yeah.
So map up your charts, do your analysis early in the week. I've given you a few good pointers there already, so use those, and let's see how we go. We'll come back next week and review what happened and see what effect we've got out of those news announcements as well. See how the market reacted.
Definitely. Thank you very much, Cam. That was awesome.
Thanks, Chris. Bye, everyone. See you next week.
Bye-bye.
Bye.